You have to watch when it gets down to these lows, because if anything happens, like I said, that's when you could really see a break of these levels, which really wouldn't be good. What is going on with the Canadian dollar? The Canadian dollar has seriously took a hit recently, and we're going to examine in this video some of the reasons why that might have happened. So let's get right into it. We covered this obviously a few weeks ago now, and obviously this could have something to do with it. You also have what happened with the capital gains tax announcement that just came out. So budget 2024 was just unveiled, but really the Canadian dollar has been going down for quite a while now. You know, we put in a high back in December for this range that we've been in pretty much all the way from 2022, and since then we've pretty much been on solid declines. We've just had quite a rapid decline over the past week here. So essentially what's happened with the Canadian dollar is obviously it's fell. You're now getting down to this low area here, and what I've said to people is basically we're in this range here, and the problem is when you're in a range, you're often awaiting a move essentially, and we're in a downtrend. So I'm always going to assume that that move is not going to be up, it's going to be down until there's any sort of sign that something else is happening here. And really, when you look at the macro view, it doesn't look good for Canada, does it? So let's get into some of that. So the investor sell-off that happened, basically it was a record outflow. This is obviously not having a good effect on the loonie. So Canada has never seen such a large foreign investor sell-off. Canada is typically seen as a safe haven for investors, but some of that sheen has begun to tarnish. Foreign investors sold a net 48.7 billion worth of Canadian equities in 2023. That number doesn't just sound astronomical, it would have been unimaginable in 2019. It's the largest annual outflow on record ever for Canada. Over the past 3 decades, a normal year would see net buying of around 12 billion, an inflow of around 1 billion a month, not the net outflow of 4 billion per month seen in 2023. And then it goes on to say that the heavy selling by foreign investors explains the issue, but it's hardly surprising. This is part of a larger trend of investors abroad pulling back on capital invested in the country, FDI being another glaring red flag. Combined with a steady net outflow in FDI, this help explains why the Canadian dollar has struggled over the past year. Indeed, the surprise that it didn't suffer an even bigger setback. And that's the thing. There is reason to believe that that could actually happen, because I do think there is a risk. Obviously, anybody can recognize here and say that if the Bank of Canada is to start cutting interest rates and they're going to drop harder and faster than the Federal Reserve, then obviously the interest rate differential is going to be better and people are going to move more and more into dollars, and that could really see the sell-off in the loonie just intensify. And because, like I said, when you actually look at the price action and when you actually look at the chart, we're in this range, and we've been in this range. We're not in a good place. In fact, anytime you get down to some of these lows, the last thing you want is any sort of bad news coming out. Like, for example, if the Bank of Canada was to come out and start cutting rates, that could be the exact thing that tips this over the edge, and then it breaks down out of this range, because typically, you know, fundamentals are coming into play with the Canadian dollar as well. Obviously, a lot of Canadians are looking at the Canadian dollar weakening as a really bad sign, but it is no wonder, and it's what I've maintained my view on since 2021, that the dollar is just going to weaken, and I've put my money where my mouth is with that as well. So it's kind of crazy what is happening, and it's been no surprise to me at all that the Canadian dollar just continues to weaken here. And I think it could get a lot worse if there's a crisis event, because everyone will pile into the dollar. And with everything that's going on in Israel, we've obviously seen a lot of people buying dollars. Gold has exploded in price, and we'll get into that actually. Let's just quickly check out what's going on with that. So it's always interesting. Just look at this breakout. I mean, wow, this is crazy. I mean, we got to all-time highs anyway in 2023, and basically we tested obviously again 2023, and then we absolutely broke out there. And like I said, guys, remember how I said about the range? You're essentially waiting a move, and then you had a breakout, and obviously this is a clear uptrend that you're seeing here. We got the complete opposite if you flip that over to the Canadian dollar. And that's what I'm saying when it comes to the Canadian dollar. Things don't look so great. They look really, really bad. And you know, you've got these numbers that I would make you aware of here. So you got 71.50 around that. That's the 2022 low. And then you've got the 68 cents, which is the 2020 low. And those will provide support, hopefully, anyway. But you never know. So it hasn't been a kind year for the Canadian dollar. So the Canadian dollar could be in for a rough ride if the Bank of Canada cuts interest rates sooner and deeper than the Federal Reserve, a scenario that economists suggest is becoming increasingly likely as the US economy continues to outperform. So think about that fundamentally, because obviously if the US economy is doing better, then once again that puts downward pressure on the Canadian dollar, and then if they cut, it's just going to compound that issue. I don't really think that's a case for the Bank of Canada cutting. I think they actually want the economy to weaken because that's what's grinding inflation lower right now. They know this. They're not stupid. It's just a lot of people in the mainstream are too stupid to understand that the Bank of Canada wants unemployment to go up. They want the economy to go down, to bring down inflation. That's their goal here. So obviously with everything that's happening with inflation, and we're going to get into that right now, it's just kind of easy to see where this thing goes. So first of all, let's take a look at business bankruptcies, because we've had another number come out for that. And it's interesting. It came down ever so slightly, but if you look at since 2004, business bankruptcies still at this insane high. We've just kind of took a little pullback there. And then you look at the core inflation rate really accelerated. The reason I'm showing you this on the month over month is because of the base effect. If you look at the year over year, yeah, we're around 2.9%, which you might think, oh, this is great, Luke. But when you look at the acceleration here, and all you got to think is we just printed 0.6%, and that is literally over a quarter of the way to the Bank of Canada's inflation target of 2% in one single month. And it just goes to show how things can flip around so quickly. And obviously we've seen oil going up as well, which I said, you know, that's going to obviously provide a tailwind for the CPI, especially when it comes to gasoline prices, because they are definitely starting to rise in tandem with oil, which wasn't the case last year when oil was taking the hit. And then if you look at the core inflation rate, that was 0.5%. So the core inflation rate really jumped. This is the one the Bank of Canada really likes to keep an eye on for some reason, even though it excludes all the necessities that everybody needs, like food and energy, you know, those volatile things as they call it. But those are the things that are actually core products. I mean, it's kind of crazy. You also had the federal budget come out. There was so much stuff about this, and you know, you had to kind of dig through to what was going on. People were really going crazy about this on X. I don't see why. I mean, people should expect tax increases in Canada. They're going to keep coming because the government is bankrupt essentially. And you know, people are expecting that Pierre is going to come in and he's just going to do a U-turn on everything. He's going to start cutting taxes and reducing spending, and everything's going to be great. And that may work out for a couple of months or a year or two until some crisis event happens or the economy starts to crumble, because the central planners, as much as they want you to believe it, they don't control everything. And then guess what? He's going to flip exactly back to stimulus, more government spending, just like Trump, just like Danielle Smith, just like all these populist leaders. You know, it's kind of ridiculous that people think it's going to be different. So under the proposal, the inclusion rate for the annual capital gains realized above 250,000 for individuals would be taxed at a rate of 2/3 up from the current 50%. Any gains under that bar would continue to be taxed at the 50% rate. And then it goes on to say that only 0.13% of Canadians, around 40,000 individuals, are expected to pay more taxes on their capital gains in any given year. I think they mean according to the budget. These Canadians have an average income of 1.4 million. The federal government estimates that only 307,000 corporations in Canada, 12.6%, have capital gains and will be affected by the changes. So it's not a massive amount. I mean, considering the uproar on Twitter, I would have thought like it was a much bigger thing than it was. I'm not sure that people really understood what's happening. Obviously, that could just drive more capital to leave, because you're talking about these richer, more wealthy people that are the ones that are generally investing in Canada. But in Canada's case, it's mostly just going to be oligarchs and people speculating in the real estate market who are going to be paying this tax. They've basically been this back and forth that, you know, this isn't going to help more construction and it's just going to get worse. There's a lot of nuances to this, and I think the amount of people that it actually is going to affect is just not that many. What was more interesting that many people weren't picking up on was the March CPI. And I really think this is something to notice because you saw inflation really start to pick up, and it will be interesting to see if this continues. I don't personally think it will. I think the economy is being crushed and crushed and crushed and crushed, and that's why you're seeing inflation come down right now. Eventually, it's going to get to a point where there's some sort of crisis event, or it just gets to a point that it's so bad that the government has to come in and do something because they can't just stand by idly and watch people struggle. They have to buy votes, and by doing that, it's government stimulus, it's loan deferrals, it's all the same crap that we just saw in 2020 that sent the CPI through the roof then. And obviously, when the inflation report came out, the loonie actually tanked off the report. It didn't do well, but with everything that's going on in Israel right now, there's a lot of things that are obviously putting a tailwind behind the dollar. This just continues this decline in the Canadian dollar. I expect that we're just going to continue around bouncing in this range. It will be interesting to see. You have to watch when it gets down to these lows, because if anything happens, like I said, that's when you could really see a break of these levels, which really wouldn't be good for the CPI. And then I just want to quickly touch on what happened with the CPI across the provinces, because it's very interesting. So you saw Newfoundland and Labrador, an acceleration in the CPI. You saw PEI, which was an acceleration as well, accelerating in Nova Scotia, New Brunswick accelerating, Quebec accelerating, Ontario accelerating, Manitoba going back ever so slightly, Saskatchewan back ever so slightly, Alberta back, but is right up there with Quebec, the two provinces in Canada with the highest amount of consumer price inflation. And I just love the politics, because you can basically just strip away the argument that politics has any effect on what actually happens with the most conservative province, Alberta, and then Quebec, which is very, very authoritarian, and they're left-leaning, I would say, although they're kind of in a whole direction of their own in terms of politics in Canada. They are very opposite ends of the spectrum, and they're seeing exactly the same thing. A lot of this is being driven by a lot of people moving to these places thinking it's the best thing since sliced bread, and basically they're not providing any goods or services, so that obviously puts more and more pressure on inflation, and that's not a sustainable trend, and it's a trend that we've seen many, many times over the past 10-20 years in Alberta. It needs its own name almost, the Alberta boom and bust cycle that we keep seeing happen time and time again. So it's going to be very interesting to see what happens. If you've enjoyed this videos, guys, I would highly recommend that you check out this video here. If you're looking for a VPN to get around all the censorship laws in Canada, I know, I can't believe I'm saying it, go to expressvpn.com/marketmania, and I'll see you guys in the next one. Take care.